Welcome, crypto enthusiasts, to the Independent Reserve Podcast.
Episode 27, the Independent Reserve Podcast. Shane Brunette, crypto tax calculator, founder extraordinaire, glorious beard. Welcome.
Thanks for having me. Really appreciate it.
Well, awkward pause. I thought I'd get some comment about the beard, the most famous beard in crypto, but I didn't get no reaction, so I'm going to have to start again.
It does exist, that's true. It's real. It's in the flesh.
No, it's good to have you along, Shane. Do you remember when we first met on Zoom call back in 2021?
Oh, I think so. Yes. It was. I think it was in summer. It was a lot warmer than today.
And I remember having a chat with you back then about the work that CTC was doing, Crypto Tax Calculator. I guess you'd been around for about 3 years at that point, so you're still fairly young but growing. Independent Reserve has recently just integrated with CTC, and you guys, the product suite and everything has just developed so much, even in just the last 4 years. But it's been great to watch you guys and now be, working with you guys even more closely, providing a great service. And the space, your business has developed so much. So I'm fascinated to hear about the whole story right from the get-go in 2018 and how it's all developed and how it's all been.
Yeah, definitely. And I'm super excited about the integration as well. It's great to see that, there's a real frictionless experience to being able to do your tax within Independent Reserve. So, taking back, maybe we'll start at 2021. I think at that point in time, we had been around for 3 years. And, it was very... It was very fast moving, I suppose, in 2021. Like, it was quite in reflection, people would claim to be a bubble at the time, but we're right back probably further than where we were back then. I think in 2021, a lot of the questions that we got was, is crypto taxable? What is the implications of crypto from a tax perspective? NFTs were starting to come out and, what's the tax implications of that? I think now we're in a very different environment where people are really starting to understand that crypto is a taxable asset, albeit there's maybe not everyone is being compliant today, but I think the audience and, the general crypto population is starting to realise that there's a real obligation around tax. And we're starting to see that shift in the market. Especially as tax authorities start to crack down on the category, more international markets.
It's a developing space, right? And the laws around tax and all this kind of stuff still feel a little bit, they are far more developed than they probably were in 2018. But there's still a bit of work going on in that space, and just this discussion going on about exactly how things are, included in your tax return, all this kind of stuff. To give you an example, I remember we had Hannah Glass and Harry Dell, which are tax lawyers or lawyers involved in the crypto space. Harry does a lot of tax work as well, and Hannah was telling us a story about how she went to a crypto meetup back in, I reckon it was like 2012 or like 2012, really early days, and there was a bunch of Bitcoiners at that meetup, and they were asking questions because there was no, real formula. I don't know. You're going to have to explain to me how the tax stuff works, but she was saying that they had a big question going, we would love to be able to use our Bitcoin to buy beer. And it's kind of nonsense that we just want to buy beer with it, but then we have to pay, CGT, and then we have to pay GST. And, no one really knew at the time exactly how it was supposed to happen. But since that time, it sounds like there's been a lot of development. So when you first started in 2018, actually, I'd love to hear two things. One, first of all, tell us about your journey. Why did you choose to start the business? How did you sort of identify it, and how did you go about building it? And second of all, what developments have you seen, really in the tax space since you started?
Yeah, so initially it was building actually something very different. It was a decentralised exchange back in 2017. Which was early days. It was pre-Uniswap, around the same time as Ether Delta in the States, but there was a lot of friction with using these types of platforms back then. I was quite interested in how you could, there was this crazy ICO bubble at the time, and it was like, how do we take that money that's going into the ICO space and actually inject that into the legitimate Australian-based startups, which at that time, there was not much capital, I think, in Australia. It's changed now. There's a real genuine VC industry in Australia, but back then it was kind of an emerging space. And I remember going to this regulatory meeting kind of like a working group, and ASIC was represented as well as the ATO, and there was a bunch of crypto founders essentially at this. And, you know, it was, the founders were really trying to grapple with the ATO and the perspective of, you know, is crypto taxable? Like, so a few founders like, yeah, ETH, obviously people had bought into ETH in that room when it was like $3-4, and they were like, well, I want to buy stuff with this ETH. You know, I've purchased it as a currency, like, why would I have to pay tax on that? I don't have to pay tax when, you know, I have Australian dollars. I'm not thinking about tax. Like, why would I do it? And so there was a real kind of friction there around what is the tax implications of crypto. Yeah, I explored the decentralized space and kind of ran into ASIC, and they basically said, don't do this, otherwise you'll be in a lot of trouble. You know, they weren't ready for that type of innovation, I suppose, when it comes to securities and things like this. So I kind of went back to the drawing board and started to think about, okay, well, what's something I can help with in the crypto industry that's going to have genuine value? I'd argue there was lots of things in the space that didn't actually have genuine value or solve real problems. I was like, well, pretty clear that the crypto users don't understand the tax implications of what they're doing. There is currently very low compliance rates back then, 2016, 2017. And the ATO, and also my experience with ASIC, like these large regulatory bodies, they don't shift from their position very easily. And we've seen that. Some fine-tuning with the SEC in the US and ASIC in Australia more recently, but the tax authorities are their own beast, and they're very much of the perspective of, you know, trying to get revenue for the government. And basically, if you're trying to create an entirely new financial infrastructure of the future, you know, tax is going to be a part of that. There is an anarchist perspective there of, you know, we don't need governments or something like this, but I'd say that's a pretty niche view. The reality is the finance industry, you know, tax is a real part of it. And I just thought that it shouldn't be so complicated. Like, people are doing all this on-chain activity, they're doing purchases on independent reserve, etc. You shouldn't have to go to a very specialised accountant or even a tax lawyer to get professional advice that might cost you $3,500 or $10,000 or whatever. Like, it should be a lot more accessible for the everyday punter to be compliant, even if they're doing weird and wacky stuff in the crypto space. Like, we as an industry want to encourage innovation, novel products, novel crypto transactions. Well, then, you know, that same person who's using those, you know, products shouldn't come to the end of the tax year and have a total nightmare case on their hands where they're charged, ultimately they've got like a $6,000 tax bill from their accounting specialist who specialises in this industry, because basically we see this actually quite a lot, and they're like, well, I'm never going to do that again.
Yeah.
You know? And so fundamentally, I think it's a really important piece of the puzzle when we're thinking about, you know, reinventing the financial rails essentially and making it more efficient. And it's just not something that I was seeing was being tackled at the time. I also had my own personal crypto tax pain point back then. So yeah, it's just an obvious value add to the ecosystem, which wasn't very exciting to a lot of people. You know, it's tax. It's not. Most people don't wake up and go, oh, you know, I want to be an entrepreneur in the crypto tax space. But it was a real 9 out of 10 pain point. And I just thought it was only a matter of time before it was really a big deal. And we're starting to see that now, particularly internationally. I can talk about that separately perhaps, but, you know, more regulatory enforcement as these tax authorities have gone from really two camps within the tax authority. One camp was Bitcoin's a Ponzi, it's going to go away, and we don't have to worry about the tax gap. And the other camp was like, no, this is a real thing. It's got sticking power, and we need to think about taxes and how we solve for this. And obviously, the second camp has now won with the Bitcoin ETF and things like that. And we're starting to see a lot more compliance actions, particularly overseas in the US, and now more recently in the UK. And yeah, it's just a matter of time until there is a real pressing need for a simple solution when it comes to crypto tax.
And, the thing that was apparent to me when I first got into crypto, particularly around the tax side of things, is that, a lot of people are familiar with the idea of buying Bitcoin, for example, on exchange. Buy, hold it. Okay, you got a couple transactions, download your report from your exchange, you send it to your accountant, the accountant goes, okay, great, you've bought an asset, it's gone up, you've sold it, I can account for that. And, the thing that's really distinct from crypto to TradFi, for example, is you can do a lot of on-chain activity, right? And so, people were taking that, Ethereum or USDT or whatever, and participating on DEXs and participating in yield, DeFi farming and all this kind of stuff. All they were trading thousands of transactions on a DEX somewhere. And then the only way at the end of the year to kind of go back and sort of account for that in your tax was to download a spreadsheet or just show a snapshot of all these transactions to your accountant. And back in 2021, I know when I first met with you, it was the same time that I guess a lot more accountants were for the first time really starting to experience it than they had before, where accountants will come into us going, I have no idea what all this stuff even means, let alone how to account for it. I've got customers who are sending me 400,000 transactions in a year and asking me to make sense of it, right? And they didn't have necessarily the technical... Well, first of all, they didn't have the understanding of what those transactions kind of meant. They just were seeing buys and sells, a bit like FX, I guess. But then also with the yield and all these types of things. And of course, like you've just said, a lot of the users themselves didn't even really know. So they weren't even sure what they were handing over. And accountants were just like, I've got no idea. This is all too hard. So, that pain point that you mentioned, being a 9 out of 10, was across the board for both tax professionals and individuals. And I remember speaking to you guys and I remember thinking, geez, because you guys have got the integration across the platforms too. So you can look at all the on-chain activity. You can look at the exchange activity and actually just sort of wrap it up and go, well, here you go. Here's the work that's kind of been done for you. So it's a solution not for users, but, tax professionals as well.
Yeah, exactly. And there's a few foundational challenges when it comes to crypto tax. Obviously, if you're buying and selling on independent reserve, that's great. You can have a really easy tax experience, especially with the recent integration that we've done. But as you start to get, say some users might get more adventurous, and not only are they using independent reserve, but they might be doing some on-chain activity. At the end of the tax season, Satoshi is not going to give you a tax report saying, well, this
Correct.
is all the activity that you've done.
Yeah.
You've got to come up with that yourself. And it's be your own bank. Well, that also means being your own source of records, I suppose.
Yeah.
And most people aren't going to write this down in a diary on paper. You actually need digital proof of receipts. And so having a system which we built, which was, a genuine third-party representation of what's actually been happening on-chain as well as off-chain with, exchanges such as independent reserve. And assembling that all together. So you need this aggregate point of view. That's A, to do your crypto tax. And then there's just the novelty and complexity of crypto transactions themselves. So I used to say to accountants, your TradFi accountants, they get this kind of buy and sell of a Bitcoin. And you're like, okay, well, that's pretty straightforward. But then you're paying for fees in another currency. It's not AUD. It's I used to say it was selling your Google stock directly for Apple stock and then paying the fees in Tesla stock. And it's
Exactly.
That sounds complex. And then, it's quite common in crypto to there's a lot of high volume activity for whatever reason. So, you might have a lot of these types of transactions across a lot of different markets. And that's not getting into situations where you've got on-chain transactions where you've got multiple assets being deposited for a single liquidity pool token. You've got income being derived on-chain or off-chain. There's just such a complexity there. And at the end of the day, the TradFi accountant doesn't want to get as degen as probably some of the audience. What they want is to be able to make sense of this from an accounting point of view. And that's really what we do, is kind of translate all of this to something the accountant can understand, so that you're not there trying to explain to them what pancake swap is and what this banana token was, and, which are real conversations that have been had. So,
have you got some records of we've had customers and they've done quite literally said hundreds of thousands, if not millions, of transactions because they've got their automated trading set up.
Yeah.
And particularly for a lot of people who would be doing DeFi, there's so many airdrop farms out there who just automate the whole process.
Yeah.
And they still need to go and do the exact same thing. They need to have an automated tax solution. Like, have you got any sort of like, maybe edge cases where you've seen just someone who's done like, 1 million transactions or something along those lines, which you just wouldn't see, I guess, in the TradFi world so much, that you've had to actually solve for?
Look, we've definitely got some crazy complexity that we see from our user base. Literally people coming in with millions of transactions and they're not actually using a bot. So that's just a lot of full-time activity in crypto. Sometimes it's almost like a business activity where they've got classic case would be a personal assistant helping them with the farming rewards, or maybe even a team. So it's actually a business activity. Extremely complex cases. I think the most vicious, though, is when somebody has done a lot of activity and hasn't thought about the tax consequences of that activity, has only sought advice post the end of financial year. And in retrospect, they could have done some things to significantly decrease their tax bill, but instead they've got a massive liability and currently have no crypto assets left because they've now lost money.
All the value's gone down significantly. They've created a taxable event, but then lost the funds later on. All kinds of stuff, I guess.
Exactly. And it's this classic case in Australian tax law, which is like you can only offset capital losses with either this current year capital gains or future year capital gains. So if you made capital gain last financial year and now you've lost all of it suddenly in, July or August, post end of tax season, you still got that capital gain that you've realised last financial year that you've got to find funding for. So people get in a real pickle and it's actually pretty disastrous for them. But
I can see this issue. I know right now there's a proposal that looks like it might get through of the tax on unrealised gains on SMSFs, where you might not even sell anything and you might have a tax liability down the track as well.
Certainly something to think about. I think fortunately it's going to hit more that 2 mil, 3 mil kind of threshold. I think they're still nutting that out. But at least at that level of SMSF, they can get advice. It's really these everyday punters who don't know, and they're actually the most economically hit. Like, they can't really afford to make those kind of mistakes in the first place.
I think I've told this story before. I was in Dubai for Token earlier this year, and I met a couple of young guys at one of the side events. The story was basically that they'd met each other the first time, but their real life jobs for them, they existed entirely on chain. That was their source of income. That was their full-time job. That's how they made their living. That was their future path. They were participating in DeFi activity and airdrops and all this kind of airdrop farming, and they'd automated their systems to kind of collect as much revenue as they could. And that's quite literally their life. They exist primarily in the world of crypto, and they really only off-ramp back to fiat currencies when they need to pay bills or rent or whatever, whenever the vendor that they're dealing with doesn't accept crypto. So for these guys, and these guys are all sort of early 20s, and I remember thinking to myself, going, they probably haven't even thought about their own taxes, right? Because they think that, well, I'm in crypto, and unless I'm touching the fiat side, I don't even have to report it. Like, you know what I mean? Case in point, I think we're going to see, a lot more of these younger people, particularly who are working in Web3 or working in crypto, where their life is in crypto. And if they haven't really thought about the taxes, at some point it's going to catch up with them, and they're going to go, geez, I haven't actually lodged a tax return in the last 15 years. You know what I mean? And I hate to, and I shudder to think what's going to happen to those guys if they haven't got it planned to start.
There's definitely a lot of that still, I'd say. And the reality is you can be on chain and live on chain and all that type of stuff, but you still got a physical footprint and likely are a citizen of some country. And if that country has is a tax jurisdiction, like an active revenue seeking government, well then there's very likely to be tax consequences to that action.
Where is it now? I guess, the fiat world, a lot of the world a lot of the taxes, particularly in Australia, are all built, and I guess the enforcement comes down to the fact, and correct me if I'm wrong because I'm kind of guessing here, but they understand that the transactions go through the banks, and they understand that transactions go through stock brokerages, and they can kind of collect that data. Whereas in crypto, it's a completely new financial ecosystem. Do you get a sense of how well they're prepared for understanding this new world? Like, do you get much interaction with the ATO to say, they really understand on-chain activity and can measure on-chain activity, or are they still just kind of catching up?
Yeah, so I can't give away anything too detailed, but I can speak generally speaking. We're certainly engaged with tax authorities. There's this very common perspective from some crypto users, which might be that the tax, I personally, as an individual crypto user, not me, but someone, can barely understand my transaction history, don't really know what I've done or where I've done it. So good luck the tax authority trying to work that out. Like, how are they going to have the capabilities to figure this stuff out? Like, that's a view that you might have heard of from one of your friends. Hopefully, no one in the audience has this view, but what you can arm that friend with now, or kind of argue back to that friend now with, is that, look, the tax authority doesn't need to necessarily understand and build that technology in-house. There's plenty of third-party providers who facilitate the reading of on-chain data and what's actually happening on-chain. Typically, that type of software has been marketed towards KYC AML compliance, so anti-terrorism rules, but that very same type of technology where you're tracing on-chain transactions and understanding the flow of funds is perfectly accessible to tax authorities. And so they don't have to build this technology in-house. There's professionals and software out there that facilitates this. All the tax authority needs to do is care about the tax gap and focus more resources on it. And that's certainly happening. We're seeing that in the US right now. You've heard a lot this week about, I think it's the Genius Bill and a few other bills in the US around stable. And that's one side of things, but there was regulation that was passed a couple of years ago. It's already rolling out. And it's essentially giving the IRS over in the US a lot more visibility of what's happening off-chain, because that's actually the problem. And then they'll be able to combine that information with on-chain data, which is, to a lot of people's surprises, not anonymous. It's actually pseudo-anonymous, but everything is traceable when it comes on-chain to on-chain. So it's a lot like, I like to say, if you've been transacting on-chain, it's a little bit like engraving your transactions on a stone out the front of the ATO's office.
Exactly.
Right.
Right, yeah.
And so the ATO just has to walk outside and look at the stone when they feel like it, and everything's there until the end of time, or until as long as that chain continues to exist. It's tamper-proof, it's fully auditable. So it's actually a tax authority's dream. And so it's combining the off-chain activity with the on-chain activity that gives the tax authority a lot more visibility.
And that's the thing. People often talk about it being sort of an index of money laundering, and you say, well, why would a money launderer want to leave a perfectly auditable trail preserved for all the rest of time, for their activity, unless okay. I guess the challenge is not the challenge. That's the wrong word. There's always going to be, if you ever wanted to move that back into fiat, for example, you're going to have to go through a centralised exchange, generally speaking, where there's a KYC process, right? Yeah. And so you'd be giving up, all your personal information, and then as soon as you move in off the exchange, you kind of all your records are then preserved on the blockchain anyway. So it's actually a fairly terrible tool for, money laundering. Yeah. Not to say it doesn't happen, of course, but you need to conduct more nefarious activity to actually get away with it. Yeah.
It's always the argument, right? It's like, crypto, it's used for fraud and money laundering. Like, that's the kind of antithesis or whatever. And it's like, well, why isn't everyone using it for that then? And the reality is that it's actually not that great for that type of criminal activity, because everything's traceable and you can you've got a full visibility over the flow of funds. Whereas if, your typical way of conducting fraud or criminal activities through series of trusts, like very opaque overseas entities, which are basically black boxes onto other black boxes. Like, that's how you go about doing something illegal. You don't do it on chain at Tuesday at midnight and then hope that the ATO is not going to find out about it. Like, that's not how you think about this.
No, exactly right. It's just one of these things that keep popping up. We're always having conversations with people, particularly on people on the peripheral of crypto, and there's these lingering perceptions around crypto and all this kind of stuff. And I'm just as you pointed out, I usually go, well, actually, there's you wouldn't want to use it. The bigger concern generally is scams and fraud and stuff like that. And it's actually people who are unwilling participants in handing over their money to someone else, and then your
typical phishing scam. But it also happens. Yeah, I mean, it's just part of finance. Unfortunately, it's not. I don't think it's particular to crypto.
Yeah. So tell us about again, just about your own journey in crypto. So, the business itself, just to articulate sort of the how it's grown and the challenges you faced along the way, because it was just yourself founding it but you've grown, and now you're sort of saying that you spend less time now developing software and it's more management time for you personally. What's the journey been like overall for you?
Yeah, I think that the business has transitioned. There's been, I suppose, different stages. It was very much like the blood, sweat and tears moment when founding the business. And it was in 2018 was when I really doubled down on the crypto tax space. And it was like post ICO bubble, Bitcoin was taking a dive. I think from memory, ETH went from $1,300-$1,400 down to like $90 at one point. Like, it was that at the end of 2019. Don't quote me on it. So it was like that period when I was building a crypto tax engine, and people would look at you and be like, "What? What do you mean? Like, wasn't crypto like a 2016 phenomenon? Like, what are you talking about? Like, let alone the tax side of things. Like, this is so niche, and isn't crypto tax?" That the crypto is anonymous, right? Like, I'll buy drugs on the internet, like that kind of meme. And so it's just, what are you doing with this? And it was really not a lot of believers, I'd say.
Okay, so you really, you're up against it. I mean, I imagine trying to raise capital in that environment would have been difficult.
There was no capital. So,
there's no capital. It's easy if you're not raising capital.
Yeah, a lot of blood, sweat and tears, really.
Yeah.
Like ramen noodles, they'd call it. Yeah, a lot of that.
It was more that your family and friends are looking at you like you just told them you're going to become a professional Pokemon card collector or something.
Yeah, something like this. And so, I still had the day job for a while there. Worked very closely with an accountant at the time to kind of think about crypto tax from the ground up, but it was a lot of work and not a lot of believing, I'd say, from outsiders. But did get some traction. Kept on building traction despite the bear market, that side of things. Really focused on on-chain support, like way before it was cool. We were doing like NFTs and stuff like this. And then, had a real dramatic shift in the business as a couple of things, like on-chain got a lot more popular. So like there was a lot more complexity in 2020. As well as COVID started to hit, so you started to get that kind of mania happening. And on top of that, we got a lot of regulatory action locally in Australia. The ATO went from basically dormant enforcement, like they weren't doing anything realistically, to sending out a lot of letters signalling that they do actually have visibility over crypto activity in Australia. They sent out something like 300,000 letters. It was like that moonshot moment. So that was, I suppose, stage 2. It was actually quite a scary time because, it's quite, there was a lot happening just suddenly overnight. Brought on a few people that I was quite close with, trusted, one of them being my brother, who was also very technically orientated. Is like a mechanical space engineer. So literally rocket science moved into software engineering.
Rocket scientist and software engineer combining just to do tax.
Which is good for us because it's very like...
Keeping it lighthearted and fun.
Yeah, well, there's not a lot of margin for error in space engineering. Like that's basically the problem. Like you can't make a mistake. It's kind of costs a lot of money if you do.
And stuff falls out of the sky.
Yeah, and so we got that kind of meticulous orientation towards the crypto tax side of things. Whereas I'm more the fast-moving kind of engineer, more go-to-market focus. So we had a good split in the business, and from there we started to hire For a while there, we thought, it'd be very bootstrapped orientated. We had, if you're in the startup space, I was very like geared towards the DHH kind of base camp philosophy at the time. But yeah, I mean, just the demand was overwhelming really, and ended up taking some funding at one point from Airtree, took some more funding from Folklore later, and a few other international VCs. And that was kind of stage 2, was really ramping up the team. And I'd say now we're starting to hit a stage 3, which is like in Australia, there's pretty good tax compliance, pretty good understanding of crypto tax, post 2020, 2021. I think there's still a lot to be desired, but, we're getting there. It's a maturing market. Whereas overseas, really, like in the US, they're still like where we were in 2019. Like it's like a novelty to. It's a very opt-in model. I guess I feel like paying some crypto tax, maybe, and the IRS has no idea. That's very much the mentality over there still, and that's all going to change with a very significant reg change happening next year, and then the UK's got another reg change. So it's very like crypto tax. It's a global problem. It's really accounting, as well as like. To your point, there's a lot more people in the space, not just doing individual speculation, but they're running businesses. They're deriving income from crypto. They've got S&Bs. They're paying salaries in crypto. So we're also supporting that side of the market a lot more. Yeah,
I mean, there's plenty of Web3 businesses now. If they're going to build a protocol, they'll go out to their network, raise their funds to build the protocol in crypto. They'll pay their staff in crypto. They'll receive they'll send out invoices to the businesses they work with in crypto. They get paid in crypto. It's part of their operating system is to use crypto for their financial backbone of their business.
Yeah.
Right. And they need accounting software and people who understand it so they can file their company returns and all kinds of stuff. Right.
Yeah.
And without people who understand the space and developing it, I can't even imagine how that you could take that to a regular accountant, even a corporate accountant that does company tax returns, and they make heads or tails of it.
Yeah, exactly. Yeah, you need very specialized software, which obviously we offer to kind of just transform it. So from an accountant point of view, it just looks and feels like your standard financial statements. And as you say, like there's that Web3 industry, but I think more and more what we're going to start to see, and you're seeing it with the stable coin payment rails, like this type of stuff coming out with Stripe and Shopify and things like this. And I think you're going to see more and more of like real life activity, I suppose I call it, real world assets, businesses building on crypto, not because they're crypto businesses, but because this is a genuinely innovative financial rails that supersedes the old banking rails, essentially.
And tell me, actually, that's a good point. I'd be fascinated to hear more about that, particularly the future direction for you guys. Can you give us a sense, first of all, the size and sort of scale of your operation now, and talk about, I guess, going into the future? Obviously, you've got a large retail user base, but as we've just mentioned, that more corporate, servicing a more corporate clientele would be part of, I guess, your growth strategy as well.
Yeah. So, I mean, we're over 60 employees at the moment, actively hiring. If anyone's looking for a job out there, have a look at our jobs page. But I mean, one of the nexus points for like why I do crypto tax wasn't just because, crypto users are suffering. There was a really big perspective there. If you think about like accounting today, every business, like real business, has their own systems of accounts, their own way of doing things internally, like internal record keeping. And then they have to transform that data and try to get onto a platform like Xero and QuickBooks and things like this. And really, you kind of, one way to think about it is like every business is its own black box, and then they kind of make it externally facing for an auditor or an accountant to look at those internal records, but everyone's doing it differently, essentially. And, in a future world where businesses are actually built on this new, crypto payments rail, like the records are actually happening real time on chain, like published to a blockchain. Ultimately, all transactions in crypto are published to a blockchain. And so there is a consistent standard set of accounts across all businesses. And so, how does that change the landscape when you think about accounting? Like,
Yeah, because you're doing the accounts your accounts are up to date as of the time of the transaction.
Exactly.
Yeah, it's not like you need to wait to the end of the year and sum it all up. It's you can deliver it real time.
Exactly. Yeah. So it's real time accounting. It's completely audit proof. So you don't necessarily need to go in and get PwC to do an audit at the end of the year, because there's this standard way of doing things on chain. It's I think that's a very interesting space. It's a moonshot. I think it's actually pretty much inevitable, but it's inevitable. But it will take time. We've seen it take time. I thought 2017, 2018, like this would all be like an overnight type of project.
Yeah.
Here we are 7.5 years later, still doing it. So obviously things do take time, but like in that kind of world in the future, the question comes up, like, what does accounting look like? What does tax collection look like? How can you, further make things more efficient?
It's a really crazy concept, the idea that you could kind of pay your taxes in real time, have your tax return and history and status up to date as of real time, because the accounting software that you can report back to the ATO can be done, through an automated system like CTC, for example, reported back to the authorities. They can see it. It's almost like you could pay your tax PAYG on everything as you go.
Yeah, exactly.
And you kind of get to the 30th of June and go, everything's already done.
Exactly.
Right? Which is an incredible concept when you think about the power of that. I mean, in fact, I've got some questions because I know you know a fair bit about AI as well, and you knew about it before it was cool. So, I have to question you about that as well. But the concept that this can apply then, I mean, what does that mean for the accounting industry when effectively your accounts can be automated, right? You can now have software that'll take care of all your clients in real time. I guess more time for pina coladas and resting or...
Well, yeah, no one really wants to spend time doing their tax and accounting. I appreciate that. But yeah, there's lots of ways to make this more efficient, I think. And I just think it's actually a really massive deal. If you think about genuine business activity moving on chain and how does that disrupt not just payment rails, but the accounting side of things, I think there's going to be...
Like, for instance, let's say, for example, we had a viable, and a widely used, widely accepted AUD stablecoin, for example.
Yeah.
And you paid your staff, you paid your invoices, all in, and you did all your collections in a stablecoin, such that all your transactions could be, summarized and tax return completed as you go. It would effectively mean that you don't have to do it. Like I said, you can just have it all automated, right?
Exactly, yeah. You don't have to wait till month end to get an understanding of your books. You can have that. And
everything.
Not everyone wants to pay their tax immediately, but at least you can have an understanding of what your tax obligations are. And then on the flip side, like from an audit perspective, like there's a lot of money spent on third-party auditing requirements, especially when you get into larger businesses and the trust around that. Like, do you even trust the auditor? How well did they audit these sort of things? When it's all on chain, you've got like much more visibility of the flow of funds and does this business actually have the capital that they claim they have?
It's an incredible amount of efficiency gain, right? Amount of time and effort spent on collating all that data, which is now just automated by machines, is fantastic.
Yeah.
And of course, you can apply that to other industries as well, where there's manual labour going into record keeping and, right?
Yeah. I feel like, there's obviously a bull case for crypto that and this is like, we live in an environment where there's a high trust financial industry, like we trust generally other financial counterparties. But what about in, other countries where there's low trust at the moment? Like it really is quite a game changer.
Yeah. Well, we're seeing, I mean, it's similar to the tax, but let's say, for example, in, I don't know, keeping the records for the trust deed for your house, for example. You've got some crazy system or employment history record or rental history record or any kind of record you can imagine, which is currently being, collated and collected like tax returns at a certain point of time for assessment. Like, I guess, I know we're talking away from tax now, but just generally the idea of crypto, using blockchains and smart contracts to automate these workflows for a lot of the stuff we do in society just has the potential to generate a great efficiency, a great productivity efficiency for economies. Getting back to the tax, I guess, tax is something that, you don't have to automate processes for like your trust deed, right? We've got a analog system and it's working fine. Sure, it's inefficient, but whatever. You don't have to trade for it. But taxes, everyone has to do their tax every year. You can't avoid it. So it seems like the perfect sort of vetting ground for this type of technology. So I wouldn't be surprised. I wouldn't be surprised if the kind of stuff that you guys are doing wouldn't start being used as a model for other industries down the track as well.
Yeah. Yeah, well, that's the idea. I mean, we wanted to tackle a genuine pain point, which is, crypto users, degens, they're trying to get their taxes sorted today. And that's a really challenging space to operate in, really. Like, it's quite a fast-moving ecosystem that we've got to keep up with, but we've done a good job of that. But, tomorrow we're in a very good position to take advantage, I suppose, of these shifts in accounting practices and how you approach accounting for real world businesses.
I know your focus is 100% on tax, and that's your business. But just given the amount of knowledge and experience, and you guys have developed in creating your current product, I just wonder if there's any scope to apply that to other industries as well.
Yeah, I mean, we definitely see adjacent opportunities. Like, I'd say, we started off in tax, but really tax is just a part of accounting, and big believers in just the accounting. If you think about blockchain as a system of records, I mean, what is accounting? It's like it's record keeping.
That's what I mean.
Yeah. Yeah. So it's a very everyone thinks about crypto from a disrupting payment rails and asset classes, things like this, which is very important, don't get me wrong, but it's also disruptive in other categories. I think accounting's one of them. Yeah.
Interesting. Because we'd love to see the again, I just would love to see more adoption cases, and I think it takes time though, right? It's going to take more time, and these things happen. Everyone sees the potential, but it takes time to build.
Well, I think people really don't appreciate how much the regulatory drag, how real that was, and now that we're seeing a shift in regulatory action, I think that really opens up the market to innovators that come in and have confidence that what they're doing isn't going to land them. I mean, I had the same challenge back in 2017 where I was trying to build something as a good actor, and it's like, but I don't want to go to jail, so I'm going to stop building this.
Yeah.
And so I really appreciate that kind of tension that a lot of entrepreneurs might face when they're moving into crypto, and it really has had a kind of bad image for a while. But I think that's largely changing. We're really seeing that with substantial players moving into the space.
Yeah, no, fascinating. The AI stuff is also fascinating. So you were telling me beforehand that you actually did you did a course in AI back in 2016.
Yeah.
So it was early AI, I guess.
Yeah, I'm always a little bit shy about this topic because it's like, oh yeah, AI and crypto. It's like mega tech bro. It's like, yeah, okay. yeah. But it is true. I did do something.
But maybe not. You probably don't see yourself as a crypto bro, but you are a tech bro. I mean, you were a software engineer at a bunch of places. Woolworths. I know you're a senior engineer there, and you.
I fixed printers and fax machines.
The tech bro tag doesn't sit comfortably with you.
Yeah, look, it's got a bad image at the moment. I'm definitely like an innovator, I suppose, but yeah, faxes and printers, I look after IT. Yeah. Look, I think, AI obviously gets a lot of attention at the moment. It's fast. I mean, crypto had this in 2021. Like, there's always these industries that get a lot of eyeballs from investor class and this side of things, and a lot of it can be justified in the long term, but we'll wait and see how much of that, how top heavy it is right now. I actually, coming from AI, we did the transformer algorithm back in 2017. It's actually quite an old algorithm, and I think there's still some fundamental challenges when it comes to AI and how far it will go, but still very useful today.
Yeah, so what are those fundamental challenges?
Oh, look, this is a big topic. I think, I had a psychology degree and then I moved into AI. In psychology, there was this age-old argument between associative or structural intelligence. So, like, is the brain learning through associations, like through neurons, essentially? Or is there some structural... where you're born with the structural capacities that have been built, I suppose, genetically over like millions of years. And I think the answer that psychology came to was there is both. And right now, the AI system, I'm getting pretty technical in a way.
This is good. I mean, it's above my pay grade. I don't know. I don't know any good questions to ask, but it's fascinating.
It's like we already have this a lot. Like, you can think about your own mental faculties, like introspection. And anyway, a lot of the AI systems today are very grounded, very, very heavy leaning towards theory of association in psychology, where you learn through correlations and associations. And this is that idea of like, throw more data at it, it'll scale faster. I don't really want to talk out of turn because I'm very much a mediocre AI novelist. Like, it was 10 years ago that I did this, but that's my understanding of it. And versus a more symbolic reasoning, they call it in AI, or structural in psychology, where it's much more like causation. Like, if this happens, then that will occur. Like, it's much more like less correlation, more causation. And I think the big players in the space are now starting to explore the other side of AI research, but it's been very heavy on this one particular direction in AI, but it's one of many in terms of getting towards general intelligence. It's kind of like, I want to say top heavy. That's not really the right word, but it's very heavy in a particular direction, where I suspect there's a lot of more foundational work that needs to be done in other areas to get real general intelligence. And I don't think that's very well. I think it will become more appreciated over time.
Gotcha. So like,
so that's my hot take.
That's fascinating. I mean, I didn't. First of all, everyone knew you from CTC, so I guess a lot of people might have assumed you were a tax guy, but you're not actually a tax guy. You're an engineer. But in your history, I guess you kind of were going down the path of psychology, but somehow you found yourself in software and tax. Yeah.
So I mean, AI back then and even today, it's very data heavy, very, very heavy on cleaning data, labeling data. Actually, the problem space that we're in crypto tax, the tax side of things, there's some rules, there's edge cases, that side of things, but it's actually a very data intensive problem space. It's all actually about the data and cleaning the data and presenting that data in a way that certain algorithms can work out your tax. And really, but it's actually a big data problem. That was kind of my background. So that's
just fascinating, because I mean, of psychology and tax and software engineering and AI. What's your personal passion? What are you?
Yeah, I think they're all symptoms of leaving school and not knowing what you want to do in your 20s. That's the reality. But it turns out I really wanted to do crypto tax. Who would have known?
Who would have known? So let's go back then to your personal story. Then leaving high school, you had no idea what you were going to do, so you just kind of fell down this rabbit hole somehow.
I left. I was one of those millennial cases. Left uni in the GFC, like brilliant time to be exiting the tertiary system, and it was challenging getting a job. I fell into enterprise sales of all things at Dell. It was actually a really good spot to work, and it taught me a lot about business, I suppose, and people are all about. Business is all at the end of the day about people and understanding people's motivations. So that was a great experience, but certainly not something I wanted to do. Got my green card in the green card lottery, the whole US lottery system. So I was over there, and really at that point in time, I was trying to work out what I wanted to do. Started doing psychology, which was a passion of mine, and then at the same time was trying to self-fund, my overseas travels with a few e-commerce stores, these types, and picked up programming, as you do, and then actually really fell in love with programming for its own sake. Didn't realise at the time, back then at school, no one was programming. It was like a really weird thing. I think the culture in Australia was like offshore IT to offshore companies, and the banks were trying to strip that out post 2001. So you just didn't really get exposed to it much, or at least I wasn't. I didn't have any friends who did it. Didn't do it at school. IT subject at school was looking after the printers. That doesn't sound very fun. So how do you know, right? You just don't know. And then started to get into program, and I realized it's actually all about design largely. There's a language component, but it's a lot about design, and I really abstract design, abstract reasoning. It just happens to be something I'm quite bad at a lot of things. I'm actually not a great speaker, so apologies to the audience on this podcast. But abstract thinking, I'm quite good at, I'd say. And so, just fell down that path, and then was like, well, how do I combine my interest in psychology and software, and then the AI thing. At that time there was AlphaGo, and got very interested in that and what this could mean. to be honest, from some prior jobs, just the experience, the UX experience of using a computer and like all those clicks, and you get repetitive strain in your elbow. And I was like, imagine if you could talk to your computer and cross that barrier to like it was more native, I suppose, to how humans communicate. And so now we're seeing that with AI, but locked into crypto tax.
I'm
10 years too soon, I think.
10 years. I'm guessing when you left uni, you really didn't. It was definitely not your plan to become a crypto tax specialist.
No,
that's incredible. Life that's quite the journey, really.
Yeah, life throws you things over time, and the thing that kind of, if you could see a genuine problem, I would double click on that. That's kind of what I've learned.
Yeah, fascinating. And so when you're not working, and what do you do? How do you keep yourself busy outside of CTC?
I try to stay away from the computer. Actually, I surf, so that's my switch off kind of mode.
Oh, big time surfing. All right, nice.
Yeah, a little bit different. Yeah.
Where'd you grow up?
DY. Yeah.
Oh, okay. Yeah. So okay. You grew up on a surfboard.
Yeah, it's like the Maroubra of the Northern Beaches. Yeah, a bit of a local kind of scene there, and that keeps me busy when there's surf. Not often surf, but
you managing to get out a bit with the because you're managing 60 people now. That's more than a full-time job.
It does keep you busy. Yeah, but I do think there's a whole thing there about maintaining composure at work. Like a lot of founders, business owners, they can get too wrapped up, and that doesn't help anyone. It doesn't help you thinking if you're just stuck in a flight and fight response. I actually had that for years. Coming out of it, I realised I was in probably a flight and fight response once the business took off for 3 or 4 years. You actually don't. You just kind of think that's real life, but then you kind of step back for a bit and you realise, you're relaxing. You realise actually, it's a lot better to operate with a clear head. And I think having that work-life balance. I mean, we're a big proponent of that at work. Is come into work clear-headed. We have a lot of flexible hours, remote work type of environment, and work when you're actually on. And when you're feeling off, don't work. Go off, have a surf, go for a walk, whatever you want to do. Get back to that space where you actually have intrinsic energy to get the job done.
Yep.
And obviously we need, that doesn't work for everyone. We hire people who are very self-motivated, but that's the kind of attitude.
That seems like a very forward-thinking company. So you should be proud, I guess. I'm sure you can't see behind the camera. Matthew's in the background, lurking around. I'll have to cross-check all those facts later on.
Yeah.
It sounds like a really progressive place to work. That's and an innovative company too. So that sounds amazing.
Yeah. We were fully remote before COVID, so before it was cool as well. So
yeah. I can't see Matthew disagreeing with anything. So
no.
he knows the boss is watching though. So
yeah. Not biased at all. Yeah,
that's good. So tell us a little bit about your immediate expansion plans then for the business. Are you doing some work in the US? Where sort of you've got your eyes on global expansion, and where are those markets that you think you guys make the most obvious sort of fit?
Yeah, so Australia is still a really important market for us. There is more clarity starting to come out from the ATO. I was part of the border tax panel, which was a couple of years ago now, but they've got a working group, a tax working group coming out to really kind of work through some of the more grey areas, I suppose, in crypto. There's some esoteric tax rules that the lawyers really like to argue over, and hopefully we get some more clear direction on that. I think in Australia, just generally, we're starting to see a lot more compliance, but likely to see more enforcement actions in crypto in Australia. So trying to stay on top of that, as well as we're seeing more and more use cases for crypto in Australia. Like it's not just retail speculation. We're seeing a lot of businesses now being set up in Australia, which are either Web3 native companies or have some sort of step leaning towards crypto, like some sort of exposure in crypto. And then we've got like more different types of investors. You've got a lot of SMSFs now coming into the space, and I mean that's a massive market for independent reserves. So and they've got real complexities. Like it's not really a choice if you want to be tax compliant. When you have an SMSF, you get very harsh penalties, and there's an external auditor who looks at this. So that's a really growing market in Australia. Beyond Australia, I mean this ATO has actually been a market leader when it comes to compliance around crypto tax and giving guidance. And there's a lot of, I guess, not a lot of love for the ATO in Australia amongst accounting professionals. They're like, the tax guides that they put up on the ATO website, sometimes they change it, and how
they
can
can
we
be
rely
vague
on but it's a lot better than some of the other tax jurisdictions which have literally done nothing except make sure you pay your crypto tax, and you better do it right. But we're not going to tell you what right looks like. That's a lot of the attitude over there. It's been a market leader. Would you believe? Now we're seeing that really ramp up in overseas markets like the US. I've talked about a bit. The UK just passed some new regs that are going to go into effect, and there's like 56 or 58 countries that have signed up for this data sharing program. So if you're trading on an offshore exchange, ATO will now find out about that most likely. And so there's a lot of this coming in, and it's just and on top of that, you've just got more and more real use cases for crypto. It's no longer just meme stock trading. That is still a good, entertaining part of the market, but there's more like digital real world assets and all this type of stuff coming out.
Yeah. I think I've said this before, but for the, in Australia, in the Commonwealth, Australia has always been the kind of like let me rephrase that. Amongst Commonwealth countries, every kind of country like Singapore or Australia or the UK or Canada, they all kind of have their flavour or their speciality that the other Commonwealth countries having a similar legal system would look at. So I heard this was actually Harry who mentioned it, and he used to be an ATO worker, that a lot of those Commonwealth countries actually look to Australia as the leader for advancing tax policy.
That's it.
Right? Because, if you're a Commonwealth country, you can kind of go, well, they're doing it really well. We've got a similar legal system. We can kind of like lift a bit of that legislation and put the local twist on it or whatever it is and move it across.
That's it.
Which is a fascinating thing. So
we're the market leaders in tax compliance. It's, we're good at something.
I don't know how I feel about that.
That's our biggest export to other government agencies. They look to us for what can you do around crypto tax. Not just crypto tax, just tax in general.
Well, I know the big controversy at the moment is, in self-managed super funds, and it's not necessarily law just yet, but the idea, and it seems to be actually a pretty big dramatic shift, and I think it's pretty unprecedented in this idea of having a tax that's applicable on unrealized gains. From your perspective, and look, share what you can, but how does that sit with you, just from a principle point of view, but also from a measurement point of view?
Look, it's definitely a hot button subject. I think unrealized gains is like a really kind of challenging change in how you think about tax. Look, it might be appropriate in certain circumstances, and I don't really want to comment from a political point of view. I'm fairly neutral. We just accept the rules as they are and kind of help people comply. There are jurisdictions around the world that do have more of a unrealized tax kind of point of view. Like, for one, my partner, she's Dutch, and in the Netherlands they've got more. It's not really a wealth tax. It's more like a change in your portfolio value from year to year, and then it's a percentage of that change is taxable. So it is unrealized tax, but it's not on the full amount. It's on the change, the diff. That kind of like, they really like that system over there. It works for them. So, not every country is the same, right? And I think there's a lot of cultural side of things. Tax it's a really challenging policy area, and there is always a loser. Like, essentially the government is taking money from someone or a lot of people, and they're going to take more from some people than others. And there's always going to be an argument on where that is, always, because it's money. And people want to
people want to hold their money for some reason.
They don't want their money gone, but they still want public goods. So there's a whole. That's politics, and definitely not a politician.
Okay, we'll stray away from that. So, all right. I think we've been running for a while, but I haven't even asked you yet about your own personal journey in crypto. Do you participate? How's your involvement?
Yeah, so fairly active at different stages of the market, I'd say. These days, quite focused on the business, so don't do as much degen activity as I might have done in the past. Just one of those classic scenarios, right, where I was working on another startup, and there was like a few other startups in this kind of incubate hub. It was back in 2015. we've all got our own startup ideas. And one of the guys in the room, he's like, yeah, I'm working on this Ethereum startup. And I'm just like, what? I got back from overseas. I was like, what? Ethereum? It's like, oh, yeah, it's like kind of like Bitcoin, but not. And I was like, so it's like Doge or something? Like, what is it?
What is this thing?
How are you building a business on it? Like, what are you doing? He was trying to do tracking of shares on chain, like record keeping actually, but for more like shares rather than like investors would keep private equity, private companies would keep track of shares in Excel sheets at the time. So it was that kind of doing it on chain. And we were like, well, what is, and ETH was, it was $1. And literally, I think it was less, it was like 30 cents or something. And they're like, oh, you can actually buy this and that type of thing. And a few other, I was really fixated on the business at the time. All the other startup guys, they had a bit of cash. They put into some money into this ETH thing, like, a few grand. No one's startup worked, not one of them.
Right.
But the ETH worked. And yeah, that was, a few people did really well there. I got in a little bit later, but the ETH DAO hack happened, like that kind of timing. And yeah, I mean, it was good. Always wish you invested
Got more.
But, crypto tax has been good. So
yeah. It's been good. Yeah. You've killed it anyway. So you've gone from, it was you and who was your first employee?
It was actually a part-time engineer from UNSW, very good engineer, had multiple offers from Google and Atlassian and things. Decided to choose us to go full-time with, but at the time, yeah. And then Tim came in soon after that.
Oh, Tim Kowalski.
My brother.
Oh, that's David.
Tim,
Sorry, what am I thinking?
Yeah,
Tim.
yeah.
I've got the names wrong. Sorry, Dave.
Yeah. Yeah, he came.
We'll edit that out later.
He came in soon after and, got the family business going for a while there. But, yeah, we've grown a lot since then, so.
Oh, nice. So 60 employees and growing. Still
60,
looking for people.
Yeah. I think it's about 64 or something.
I've got some of your merch. Matthew gave me some of your merch down at a conference down there, so I rock it at home sometimes.
Gotta love the purple, always looking good as a dressing gown, I think. So, yeah.
It's glorious. My kids love it. It's got the you got the calculator on it.
That's
So
it, yeah.
They come up and they're like, yeah, check it out.
Keep it clean, mate. Keep
it clean.
Lots of mud on the purple. Yeah.
Well, I'll wait until I'm out. Like I'll take off the IE gear once I'm out at night time, so all my bad behaviour becomes CTC's problem.
Yeah. Anonymous, right? Yeah. Blame it on the purple.
Yeah. No good
They
stuff.
call it regal, right? The purple colours, regal.
How'd you come up with it?
Purple's not too popular. Everyone's got their own colours in startups, and I was like, well, no one's really taking the purple. We'll take the purple, just like you take the crypto tax. You take what you can. Purple was available. Yeah. Yeah, it's not everyone's colour, but it stands out. That's for sure.
It stands out for sure. Oh, the old grimace. So it wasn't because it was your quietly favourite colour because you're a Prince fan or something.
No, I know Anytime Fitness has purple. You see the purple; it glows purple in the dark. It's like Anytime. But anyway, I don't go to Anytime Fitness. But yeah, there's not a lot of purples around. Cadbury, yeah, chocolate. Tasty.
Cadbury's.
Yeah, it's a few things. You got to look for it though.
Well, I must admit that when I think of purple, I think of that Ben Stiller movie with the dodgeball. His Globo Gym was purple. I don't know why that pops into my head.
Yeah, I'm not actually a
And the
purple.
cobras.
I'm not a purple. It's not my favourite colour or anything like that. So, it was actually like, how do we get to it? I think it was like those classic, like, I need a logo, don't have any money, go on Fiverr. Literally, it was like $5 the logo, and it was purple at the time. Oh, purple works.
Yeah, nice. Oh, Matthew, jump on camera. Let's have a look at the purple.
Oh yeah.
Give us a model. Here we go.
There we go, mate.
It's hard to miss.
It's hard to miss. There we go.
Yeah, Matt might surf as well. You could.
Oh, a little bit.
Bit of a theme going on there, but yeah.
Is the like Matthew's got a glorious mustache and you've got the beard? Is that a CTC thing as well? Like you can't get a job there without a
Compulsory facial hair.
compulsory facial hair. And
some of them players.
so you have to surf and
try.
you have to have some glorious facial hair.
Yeah, some of them try. I do have some competitors in the office around the beard.
Really? You haven't even got the best beard at CTC.
Oh, I don't know. It's debatable sometimes.
We had,
Who are you giving the title to, Matthew?
Yeah,
Well, you got to give it to the boss, right?
Yeah. We had someone who had one. Harry used to have one almost.
Yeah, grew it out. It was like a really thick red beard, and I think there's definitely something for the red beard, isn't there?
You know what? During COVID, was there any time I grew a beard? I grew the Bushman, like a bit,
Oh, there you
not as
go.
long as yourself. It was a good Bushman, though, a proper one. Because if you're going to grow a beard, you want to go a proper one, like the ZZT top
that's what
one.
I say.
And I loved it, but I've got like a bit. Like yours, mine's wiry as well, but it's also just real red, and it just looks. My wife was not happy.
The lumberjack vibes.
Yeah, I was loving it, and my kids loved it, and I loved it. And I was
Canada.
like, I thought it was amazing, but no one else shared that view. And when I tell you what, when I shaved it off, one thing I noticed is my chin was much higher than I was expecting because you feel like it's down here. And
I don't want to talk about my chin, mate. That's a touchy subject. Yeah.
Oh, that's why he's got the beard.
Jokes. Don't get any
Yeah. And I didn't recognise myself. I reckon I grew it for a good year during COVID.
Oh, yeah.
It was a property, and I loved it. And when I shaved it off, I was like, I couldn't recognise. It took me a few days to recognise my own face in the mirror.
Yeah, you'd really shock people. Yeah, it's a real shift, like how much facial hair changes, like totally unrecognisable.
Yeah.
That's my great escape, is to shave the beard and no one knows who I am.
Well, you can't now. It's kind of a signature look for you. Like you've had it for as long as I've known you, which is I guess 4 years. But
might go at some point. We'll see. But partner's a real big fan. I think it's largely driven by your partner, right? The missus, if they want it or they don't, that kind of defines whether you have a beard or not.
That's actually 100% true.
It's always the case, mate. They're the real winners. Yeah.
I remember the day when I was finally told. She's like, I've had enough.
Yeah.
I was so sad. I took a photo of it waving to us, like saying goodbye to a friend.
Yeah, exactly. Yeah, you're looking at it in the bin, right? You're like,
There was some tears. I shed a couple of tears, and I moped around the house, letting her know that I was quietly unimpressed.
Yeah.
I didn't have a choice. Matthew, what feedback do you get on the moustache?
Some people like it, some people think it's a bit seedy, but...
What about the girlfriend or the missus?
She likes it.
Okay.
She tells me she does, at least. I don't know what that she really is.
Yeah, just don't shave it, and so they don't know the difference. And then, that's the secret.
It's a mighty eagle's perch. It's very impressive.
Yeah.
Well, yeah. Well, I think like there's a couple of people. The signature look like I know Fred from Finder and stuff. He had the hair and he had it shaved off for a good cause and stuff like that. And
yeah. He does a lot of things with his hair. Yeah.
So you'd have to have a good cause to shave it off because it's a bit of a signature look. I mean, I only mention it because I'm envious as well.
Yeah. Oh, well, it's good to hear you can grow one. Not everyone can. So.
I know some people have like missing random spots and it's just a bit patchy.
Well, I'm just a generally hairy person. I'm one of the guys who I've got a full scarf, like from front to back. You got the back neck hair, you got the front neck hair. It's like a donut. I could have a donut. Yeah.
Oh, it's good to hear. Now we're actually getting the good stuff. Like you've been telling us about tax for an hour and a half, but we just wanted to hear about the beard the whole time.
Yes,
and the back hair, of course.
Yeah.
So I'm guessing.
I'll leave it to the audience's imagination.
Well, I'm guessing Mrs. is happy to shave the back hair and keep the facial hair because you've got to choose one, right?
Yeah. I can't actually reach my back hair, so yeah. It's.
Well, seeing as you can't reach it, you can't see it. It's not really your problem, is it?
Yeah. Well, yeah. Anyway, yeah. Fetched felt well away from the crypto tax. Yeah.
Oh well, it'll be a sad day if for some reason you do decide to trim it off. But look, if you do it for charity, I'll chip in.
Oh, there you go. Yeah, you're a crypto charity, maybe. Yeah. Yeah. We'll see. I'll see if I get adventurous.
Good stuff. Well, I think we've been running out of time. We've got who's stopping by? Good mate of yours, Joe Shue's going to stop by a bit later on today as well.
Oh yeah, nice.
Yeah, I think he said he was going to catch up with you guys, so we're going to have a little catch up after this and
lots to talk about. Yeah.
But thanks for dropping by. It's been fascinating. We went places and finally got to talk about the beard because it's been on my mind. Honestly, it's been on my mind for 4 years.
Really double clicked on the donut. Hopefully that's not a meme that I see on the socials.
With the added bonus of finding out that you actually have got some quality back hair as well, mate.
Yeah. Thank you. Thanks for having me. I really appreciate the experience.
Thank you. No, but look, it's been great to have you guys on, and also as well. So as you know, we've we've been working really closely with you guys and integrated with you guys, and it's been a fantastic journey and it's good partnership. And long may it continue. And thanks for stopping by.
Yeah, it's tax time, so all the audience, it's easier than ever now to be compliant. Don't be shy. It's a lot easier to get it out of the way. It's a big lift on people's shoulders.
Yeah, please give it an absolute shameless plug. How do they get in touch? Like, how do they do business with you guys if not already?
Yeah, just right through the Independent Reserve website. You can click through there, find the taxes section, and presto, you'll be almost there.
Yeah. Done. All right. Look out for the purple.
Yeah, that's it.
Ciao.